Welcome everyone to the Kendall Report. Tuesday night. It was a hard thing not to come live earlier today. It was a crazy day again. So before we get started tonight, remember to subscribe and like these videos. Folks have been doing a great job. I'm getting over 1,000 likes every day. So just for the heck of it, push the like button and let YouTube know we need more subscribers out there. So anyway, welcome everyone. Man, I tell you, somebody said crazy times. It's nothing could be said. I don't even know how to explain what's going on right now. The markets are at a capitulation point, I think, here. And, you know, with the treasuries soaring like they did, listen, I've been going on about this. I'm going to have to stay on the story. I don't see anyone talking about who the sellers are in treasuries. All I hear is the Fed, the Fed, the Fed. I don't think this has anything to do with the Fed, what you're seeing on your screen right now. What we're seeing with these rates surging, the yield curve flattening, is just massive selling, and I believe it is the Japanese. They intervened yesterday trying to support the yen, and now we're over 135. I'm telling you, 137, you will see some fireworks. They're going to get real desperate around there. I have targets I showed you last night of 142 and higher. There's some crazy fib targets out there right now. I don't think they're realistic, but I do think 142 could be a thing here. And at that phase, we're going to see something really substantial. But I think, I was talking to institutional client earlier today, and, he's talking about the Fed's going to pivot. No, they're not going to pivot. There's nowhere to pivot to. I explained last night that the whole situation here, it's like the Fed is in a house in the back corner. There's no windows to get out of, and the house is on fire and you can't get to the door. They have nowhere to go. This game is pretty much over. But like I said, in tweets and some other things that I put out there, is there's literally not driving the bus. The Fed is not driving the bus. This is all being dominated by an international situation, which is not being talked about. I talked about this. You guys know, if you watch a little bit, I talked about this 5 or 6 weeks ago. I wish I had a way of finding exactly. If you guys know when I first mentioned the Japan situation, put it down in the comments. That would be awesome. Maybe you remember when I was talking about that, and the whole yield curve strategy that they have, and that they're going to have to support the yen. Well, that's happening right now. And I know the big Fed meeting, and everybody thinks somehow the Fed's going to pivot. They haven't even started QT yet. And they're already, people are talking about them increasing something they haven't even started. So we're in these point in time where the news lines and everything, nothing makes sense. We saw the market print down into another low today. And it's interesting, I thought, and I'll go through the details here in the technicals, but we printed 37.08. The last low was like 38.08. So this 08 number's coming in. We saw we printed 08 when coming into close, ran just about 40 handles off the lows. It was just a vertical move off of that point. A lot of short covering. We're still up overnight right now. But the point is that these markets are so uncertain now that there's no way to even participate in them. I've talked to, it was a really busy day for me today, just dealing with folks. We have a lot of folks that have a lot of money, other people's money that they're running, and just talking to numerous advisory groups, and did a couple conference calls today. It was just, everybody's very concerned, but trying to message to clients, and that's what I'm doing to you folks and to those of you that are advisors, is, the message is, I made a comment to somebody, is why would you own anything in this market? There's no such thing as a defensive strategy in this type of market, and with the yields spiking, everything's happening. This is not 2018. I went through the scenario last night. This is something I think much worse. And I think what we're about to see is, and listen, we can get a bounce from here, but it's not going to make this go away. Okay, we could rally all the way back to, ran 300 points. We could go from 3,700 back to 4,000. It's not going to change what is happening right now. This is not going to go away overnight. There's some magic silver bullet that's going to stop everything, and it's going to get better instantly. I see these people on CNBC talking about, well, the market's going to recover and it's going to be unchanged on the year. Why? Why would that happen? So we're not going to see the Fed pivot because there's nowhere to pivot to. What would they do? Add more money, do more QE when they're telling they can't go back on their word, so to speak, right now, because they already have no credibility. They will have less than no if that's possible. They'll have a negative credibility rating, and I don't even know if that's possible. I can tell you just a real quick, just because we're coming in this meeting tomorrow, I have been around since the very Paul Volcker came in. I started actually in the markets, I think about 3 weeks after Paul Volcker came in. And this was I've watched Volcker and Greenspan and Helicopter Ben and Grandmother Yellen, and now somebody's got to help me. What's a good nickname for Jay Powell? We got to come up with a good nickname. But I've never, I guess through all these times, I've never seen this level of incompetence. And it's funny that Yellen is in the Treasury right now, promoting all kinds of things that has nothing to do with money. And, the wheels are coming off the ship or off the train or the car, whatever you want to say it. It is just absolutely absurd. So don't expect any pivot. Maybe they'll accelerate something they haven't started yet. That's a possibility. But in the end, there's no way out. And I still will believe, and I think we'll find out, somebody's going to go, there's going to be a report when the Japanese come up with their holdings of their securities. Whenever that report comes up, everybody's going to go, gee, they sold some. As I talked about, not to get in conspiracy, but the Chinese could sell some bonds here and just destroy America. And they don't have to sell a lot. You don't have to sell 1 trillion bonds. You just have to just keep that bid from, coming in. Just keep taking it out. So just be very, very cautious, folks. There's nothing to own out there. There's no magic stock. Maybe there's a short-term couple-day trade, but even that's going to continue to be somewhat, I would say not somewhat, but extremely risky. So be safe out there when it comes to your money, because the stuff's hard to come by. Couple things, I just want to go through some of my notes here. Looking back, PPI came out up 0.8 month over month. Year over year was 10.8. That was a little better than the 11 that was expected. And there's no peak here. That's not what's happening. Not going to be any peak at all. And then we saw, like I said, inflation came in, we'll just say better than expected. And you watch the 10-year go to 3.48. These are numbers that I thought were somewhat unrealistic just a few weeks ago. And in fact, I realized in the last, I think, 12 days, we went from 2.8 to 3. We'll just call it 3.5, right? And it's not done. Somebody's talking about a blow off top. I think this is just a breakout. And I'll show you the yen again, because this is going to be my thesis for the moment. And I'm always encouraged. I can tell you this, in my history, there's people that will watch this video that knows this to be absolute 100% true, is that in 2007, when the Bear Stearns first had a problem with the hedge fund that had the mortgage-backed securities in there, I was telling everybody that I thought the banks were in big trouble because it was obvious everybody had the same portfolio on. So when that liquidation started, I was screaming in 07, long before 08, that these banks are going to fail. I did a presentation in front of a group in early 2008, and I wouldn't say I was laughed at, but no one believed me when I said that all these banks are going to go out of business. Lehman was going to go out of business. Somebody asked a question in the Q&A session and said, "You're telling me a 150-year-old investment bank is going to go out of business?" I'm like, yes, that's what I'm telling you. And it did. And, the point of this is I'm not bragging. I'm just telling you that for whatever reason, I believe there's a really, really big seller in the treasuries, and it's not a bunch. It's not who you think it is. I believe it is the Japanese, and I think this could just completely blow up. So what better situation? I was around in the Asian crisis. I was around the 87 crash. I've seen a lot of stuff, and this stinks. And I think I still have the right chart up. I can get it up pretty quick for us tonight. But I brought up last night the quarterly chart of the yen. It's basically been flat in a range, and now it's spiking up to the Dow yen is the highest level it's been historically. And I think it's going to make new highs. And there's nothing, as I said, that the Japanese are going to be able to do to head this off. This thing's going to this may be the black swan event. Everybody's worried about the Fed, and meanwhile, this other thing's happening. Okay, I'm done. So we'll see what happens. We'll see if I end up being right, and turns out that the Japanese are big sellers. Okay, so let's move on to, we've got the FOMC meeting coming. I've said enough about that. They're going to probably do 0.75, whatever number they come up with on the taper. It's a joke, right? They could do 100 million, 200 million, billion a month, and it wouldn't matter. Maybe that number wouldn't matter, but they're not going to do that, right? So you're just going to see some really nothing numbers, and everything's going to continue as it has been, and it will be, I think, a complete train wreck in the end. So, okay, so let's look at what's coming out tomorrow. No one's going to care about this, by the way. Retail sales, Empire Manufacturing, Housing Index, it's blah, blah, blah. No one cares. Everybody's going to be glued to the Fed. I'm trying to decide how to handle tomorrow. We typically have a Wednesday live room that we focus on some stuff. I think the markets are so unique right now. I may end up going live during the meeting tomorrow and just do a live stream tomorrow. I just think there's just too much going on. It's depending on how we come in tomorrow and everything. I just think you have to kind of be live, and we'll hang out together. So tell your friends, and we'll do that. I think I just made that decision. So those of you that are watching in live room, we're just going to do YouTube. I'll come up in the live room and chat to you before that happens. So if you're hanging out in there, maybe at 12:30, 1 o'clock Eastern time, probably come in about 1:30 or so tomorrow on a live stream, because I think this is way too important. I think we could see some really crazy situations, and I'd like to have that recording in history, so to speak. See if there's anything else out there that I needed to talk about on my notes. No, let's go ahead and get into the database. A lot happening there, and we'll get into the technicals. Should be able to get through this pretty quick. So just mark your calendars, and we'll see you tomorrow on a live stream. Well, here we go. We're at 17.2% bullish. We had 5,474 sell signals. We were around 28%, so we've got 16,167 symbols in the database, so it's quite large. There's only 43 buys. And 5,474 sell signals. So there's just a mass liquidation again. We got a bounce. We actually got up to like 60 some odd percent bullish on that little consolidation that we had for a couple of weeks, and just a complete failure. And it, to me, just stinks of further liquidation. We as I mentioned, we toyed with that 3708 number. I was talking about 36 handle numbers. We'll go through all the detail here in just a couple minutes. So let's go ahead and get into the technicals. So here is the futures up 16 handles, 37.56. We traded up right before the London Open. I stayed up for the London Open last night, and we traded right into it. When the London boys came in, they just hammered the futures all the way down, and it just continued to decline, throughout the session. So it's just crazy. We're seeing PPMs at huge negative rates, minus 0.86, minus 0.35, 39, and minus 0.42. These are really big trend numbers, and this is a daily chart, so these are substantial numbers. And even if we went sideways for a few days, we got the RTX sell signal, the STX buy signal yesterday, and we managed to close lower, but nothing drastic. So we're kind of flatlined here in real scheme of things. And the Nasdaq actually was able to close higher. Yesterday, S&P was down 0.38 on the cash, composite down up 0.18, and the Russell was 0.39. If there hadn't been a decent bid in the tech stocks yesterday, it would have been a complete disaster. I don't know. We might have printed down into maybe 3650 handle, maybe. But there was a decent bid in the tech stocks, which helped things quite a bit. But this pattern, I think we're going to stay sideways. I think tomorrow's going to be a crazy volatile day. And there's going to be a lot of emotions. And maybe we can get an opportunity to see that fade trade that I talk about off the news. We'll see what sets up tomorrow. But oftentimes there's a big trade. I think tomorrow's one of those days where you don't want to be too bold in putting in any big positions on. I think it's really, really crazy to get too involved in these markets. You can trade light, but I would not get too heavy in anything here and think you've figured out something. That could be a real problem. Let's look at the market grid for tomorrow. So you can see this is a pattern I haven't talked about for a while. In the market grid, it gets into a box pattern where it flattens out. Volatility has maintained the last few days, so it gets into this box. We're looking at S1 3710 was a retest of yesterday's low. A S2 is a 36 handle number, 3677, S3 3644. If for some reason or another the tech stocks get hit tomorrow, then they're easily to print a 36 handle tomorrow. 3650 is not out of the realm of possibilities for tomorrow. So we'll see what happens. R1 3770, and then R2 3803. That's probably going to be maxed out. That's about where we got last night. If we look at the range last night, we got 3807.50 it printed, and then we just sold off all the way down. And this is really something. And I didn't mention this, but we do have this retail sales number. Everybody's going to have their eye on it. See, somebody made a comment about the Amazon. Amazon's like just getting crushed as well. Everything's getting crushed, right? And even the energy stocks. And in last night's video, I'll cover this when we get to the energy. I misquoted what the models were doing. I'll show you in a minute here. So, but as far as the S&P goes, let's go over to the weekly just to see how we stand there, because we're going to have to start looking at some of these extreme numbers. 3722 was S3 weekly on the S&P futures. STX is 3666. So there's a lot of things looking to print down there. And then, of course, I spent a lot of time talking about the 200-week moving average, not the 200-day, but the 200-week average is coming into play across the board here. And we also have this Fibonacci target. I won't go into a lot of detail. 3489, the 200-week moving average is 3450. So these numbers could happen very, very quickly. And I don't know that they're going to get a bounce from there. Well, if that happens. So just expect a wild day tomorrow. So the strength in the Nasdaq is continuing. We're up 75 handles right now, 11,422. This is still a weekly chart that I've got up here. Let's just take a look at this. S3, 11,196. The low was 11,236. So it came pretty close to an S3. That 200-day is just below here at 200-week. 200-week is at 10,812. But what's interesting here is we are seeing PPM2 actually turn up through its second derivative. So maybe we're going to get some stabilization here, but these rates of downward pressure on the weekly trends are huge. They're up quite a ways above here, but I always go in and I talk a lot about these patterns that come up with the moving averages. So you get this happens to be the declining 10 with a substantial amount of downward pressure with the PPM at minus 2.27, and you get the average cutting down into the market grid. That's a very negative formation. It's the opposite. When we look at crude oil in a minute, we had that rising 10 pattern through there, and that drove the markets higher. It's still a dominant force in the energy market. So this is the inverse, which is the declining 10, especially on a weekly level. These are really substantial numbers. These averages don't turn around very quickly. It takes weeks, maybe even you could say 6-8 weeks of stability just to get to burn off this downward pressure. And there's so much downward pressure, we continue to see some of the lower bounds of these patterns get tested. So don't expect any big turnaround. There's not that there's, we're up 84 handles now since I just started talking. So we rallied 10 handles. The S&P is up 19 now. So we're just seeing, a lot of squaring up of positions. It's going to be interesting. I'm going to stay up and watch the London Open tonight. And that's always a very interesting time of the evening, and coming in, that's roughly about 6 hours before the U.S. Open. So it's going to be a wild night, folks. I just hope I don't wake up at 4:30 in the morning and can't go back to sleep. We'll find out what happens here. But let's go to the daily real quick, just so you can see this pattern. So the daily has got that box formation. PPM1 is at a minus 0.94, minus 0.45, minus 0.51. And I'm telling you, folks, you need to get these indicators. I'm going to I'll try to show some stuff real time tomorrow why you want these things. But you go to kendallreport.com/indicators and sign up. It's one-time fee. You own them forever. It's my give back to everyone. I've been criticized that, why aren't you doing a subscription? It's a one-time fee. But this pattern here is similar on the weekly, because we have these are very robust numbers. On the dailies, don't get into these two handles like we're the whole numbers. Once in a while, we'll get into a 1.5, 1.17, but we're at 0.94. That's a pretty big number. That's basically just about 1% per day. That's a crazy, crazy number from that standpoint. Come up with the RTY. It says same pattern. They're very similar in configuration. We're up 0.52. S&P now up 0.47. Nasdaq is now up 79. So it's back, and it finally found some resistance here. But all these markets are starting to firm up overnight. I think all it is squaring up ahead of things. There's no opinions being placed here. Just like, do you want to be short coming in? Maybe not. You're still taking out stuff from yesterday. We're still in the middle to the higher end of the range of yesterday on all of these indexes right now. So let's take a quick look at the weekly just to see. I want to make sure we all have in context these extreme numbers. Now the STX weekly on the this is RTY, and the futures on the Russel is 1676, the low 1690. So we get pretty close to that. S3 is 1705, the low, like I said, 1690. So in between S3 and STX. And we're seeing this turn up again. I remember talking about this many weeks ago, that it looked like the Russell could lead us off the lows. Well, it got up, got a cycle top. You see these two dots here. That's a cycle that came in, and that just completely was the top. And we rolled back down towards the 200 week, and here we are. But it's interesting, the formation here, but we're still very negative, minus 0.65, minus point on ppm2, but one is 1.46. So it's got that, already has that declining 10 pattern in there. So this is substantial. So we're trading at what should be around the extreme for the week. So this little bounce that we're seeing here is expected, I would say. But once we get the news tomorrow, we'll find out what it's really all about. Okay, next market is the interest rates. This is the big story, and I'll bring up the yen here in just a second. But one of the things that's interesting is we have a cycle that came in today. So I haven't checked the overnight. So Frank, hey, thanks if you're live. Thanks for getting the indicators. Appreciate it. We'll get you all trained up here soon. Okay, so let's go. I just want to see if there's any kind of movement on the 10-year overnight. Yeah, we're actually down to 3.43, down 5 basis overnight. So there's that little cycle top is coming into play, we'll say at the moment. Maybe we'll go sideways for a couple of days. So it's going to be interesting tomorrow, folks. Can't wait to see what we have to deal with there. We are stretching everything to the extremes, I will say at the moment. Let's take a look at the weekly. This is absolutely insane. We've actually blown to the top of the market grid. We're just out of bounds. So if we stay up here, we're likely to see the RTX sell signal, maybe some sideways stabilization. Maybe that's the thing. Maybe the dollar will settle back in. We'll see. I'm going to go through the yield curve, then I'll bring up the yen, because that's my story here. I want you to look at this yield curve here. It is absolutely collapsed. This was the April low on the 530. You know, that's my favorite. It was at 12.5 basis points inverted. We are right now at 16.4. So I've been talking about this for the last couple days. If we stay reversed, inverted for at least 3 to 4 weeks, then this is just telling you that 2023 is just going to be even more of a disaster. I think we're in a recession right now. I think that's what the markets are saying right now. I don't care if GDP comes up for this quarter and it's positive and we don't have a technical recession. I believe we're in there and things aren't likely to get a whole lot better. Last time I checked, Joe Biden's still president, so nothing's going to change. And that's not a political statement. That's an incompetent statement. So the point is that what we're looking at here across the board, especially in the 1030s to 530s, I know that the 210s are also inverting big. This is a big story, and this is one of the things we're going to look at. So I'm going to bring up the yen here right now. Let me go full screen. And I brought this up last night, but I'm going to go to a daily. This is the trading view with the indicators on here. The we're at 135.24. Let me click this over. This is a quarterly. Let me go to daily for a second here. You see the yen is down a little bit. We'll see if they're going to intervene overnight. Everything's kind of backing up. There's something here. If you do have the indicators, if you don't know this, I want to show you a little bit here about, you see these red, there's a red dots here. I don't know if I can make it so you can, yeah, here's a little better. So you see this red dot that comes through here. That is what is considered to be a pivot point. So when we got through there, it's still calculating. That's going to be 133 is going to be your support on a trigger here. And we're likely to see this market really start to move up to these fib targets up here. 140, let me get the right number here. 141.70 is that target. And then 147, 150 is some targets that are out there right now. So this is the pattern. This is the 3-month. So this is a big deal. We got over here to 146.79 back in 98. That was during the Asian crisis. I think we're about to maybe see even a bigger Asian crisis than we've ever seen before. So this was a monster amount of stress in the Asian banking system. I believe we're about to see, maybe Asian crisis 2.0. I don't see anybody talking about it. We'll see if I'm right, like I said. Okay, here we are, weekly crude oil. Crude oil continues to climb. The old high here, let me get the numbers up here. We're still printing just below the old high, which was one on that spike that we had, 125.83. So we're waffling here, but here's that rising 10 pattern I was telling you about. This is what I was just a minute ago. We were talking about the declining 10 through the market grid. This is very significant. PPMs are off the map here. They're at 2.26, 1.93, and 1.72. So they're in that trend maintenance mode. I haven't talked about this for a while, but on these indicators, I'm just going to draw this in very quickly. This trend on crude oil goes way back, where we get these spike up on these indicators, and then we get in what I call trend maintenance mode. So they spike up, this sets the momentum, and they happen at different times. So this one happened here, the peak came here, and what this did was all of these moving averages that you see that are sloping up here, that's the angle of attack that I talk about all the time. That angle of attack has been in place for almost 2 years. It goes back to November roughly of 2020 that we were getting monster buys out of our database in the energy sector, and that was where the trade actually began. And there was a continuation of that trade as we went through everything. But that pattern is really important to understand, and I think that's good. I'm going to show you, I brought this up, XLE, AA4, it's pulled back the last couple of days. I'm going to bring up our portfolio expert platform. And the green line is an ETF hack we did. This was the XLE. We took about 24 stocks out of the XLE, put it in here. So it's pulled back pretty good. But one of the things here, and this is pretty small, I don't expect you'll see it, I'll read it to you. But the percent invested now is 53%. We're 46.47% in cash. Last night I thought it was 15. I think I pulled up the wrong portfolio at the time, but this is that hack right here. And the green line is the hack, the blue line is the S&P. So it's literally been a divergence. Everybody knows this is the only place that that you could have made any money this year is in the energy. It was the obvious. The last few days, we like I said, we've moved the meter to about 50% cash here on this strategy. Okay, folks, gold got absolute hammered. Been talking about it potentially going back to 1760 and maybe 1706, which would be the 200-week moving average. PPMs are just accelerating down right now. We are looking at a potential for an STX buy signal, but all that would do is put us sideways. But this has the same pattern here. Let me see if I'm going to attempt to blow this up real quick here just so you can see it. But you can see this, the market grid. This is that declining 10 within the market grid with a decent angle of attack going. 0.71 is anything over 0.25 is a trend. So we're seeing that. Matter of fact, if we look at the values here, 1879 was that 10-week moving average. The high was 1882. So we went right up to it. You got this big angle of attack. You get rejected at that point. Now what we're doing is probably maybe going to consolidate, but that 10-period moving average is accelerating and is going to have plenty of downward pressure to keep this market literally in check. There's no rally in gold coming. So the point of this is that gold is not in play. Inflation can do whatever it's going to do. There's just a lot of sellers in gold. Just for the record, I like some of the suggestions you folks are coming up with for Powell's nickname. Okay, so final market I'll cover is Bitcoin. We are trading down below the 200-week there. That number right now is at 22,355. We're trading 22.11. I believe if we close below that this week, we could see an acceleration on the downside here. Nothing good coming for Bitcoin. Somebody pointed out that a while back that I said that if you could buy 33,000, it would be a good buy, and it was back then. But we got rejected here on this rally when we traded up to like 48,000. That was in April. So everything turned, PPMs turned, markets turned. All of a sudden, 22,000, which was in play. I told you if we took out that 28 number that we'd see 22. It happened very quickly. And I think some of the things that you're seeing going on with Coinbase and some of these other players out there, you're really looking at a disaster in the crypto space. There's just, there's a big lesson being taught right now in the crypto space. And I don't see any real bounces coming here. This is a risk asset. So maybe it'll bounce with the Nasdaq. There's no traction here tonight. Doesn't mean it has to be. It was positive about $500 or $600 earlier. The high's been 23,260, so it rallied pretty good. But there's just sellers, people looking to get out on any rally, and it's going to be interesting. I started what may be a little bit of a conspiracy theory last night, that if there's any entity out there at all that would like to see crypto fail, it's probably the U.S. government or the governments of the world. And who knows what's going on with this market and the amount of selling that we've seen here. like I said last night, if everybody's hodling, who's selling? So it's interesting what's going on in this market. So I still see a ton of risk here. I don't really follow any of the other coins. I used to follow Litecoin and the stuff that was originally on Coinbase. I do Bitcoin every night by popular demand. So anyway, that will do it for tonight. So folks, this will be the end of tonight's broadcast. I will go live tomorrow, probably about 1:30, about a half hour before the Fed release. And we'll hang out. We don't really like to listen to Powell. Was it somebody said Uncle Powell? We'll have to see. Uncle Jay. We'll come up with something here. Yeah, and those of you are regulars on this channel, I was talking about the DEF situation with the diesel. Somebody posted here, just looking at a couple comments real quick, that we're really, you're seeing $7.15 at on diesel, and it's getting pretty crazy. They finally have started to print some prices up here. My office here there's a truck stop right behind where I'm at here, and it's they're starting to print them up here. They were pretty stable for a while, and now they're starting to move back up. Like I said, there's nothing good going to come out of any of this stuff, and so we'll see you tomorrow on the live stream. So tomorrow's going to be a busy day. Be maybe 3.5 hours on the internet. Hopefully I'll get everything out during the live stream tomorrow, but I'll be here at the same time tomorrow, be on the live stream. So if you're in the live room, I will show up in there the usual time at 1 o'clock and hang out with you folks in that room. But I think just got to get this, just too much going on. There's not going to be any way to focus on any educational issues or anything tomorrow. So anyway, folks, thanks for watching. I got out underneath an hour again, so remember to like these videos, subscribe, do all that good stuff. Hit that notification bell so you know when I come live. And I will see you tomorrow at 1:30 Eastern. Have a great evening. Good luck trading, everyone.